So this is the income statement you are given, and we reduced or we rearranged this income statement like this. If you look at this statement, what you can infer is they made a total income of 294 crore or 295 round off 302 crore, and they made a profit of 4.25 crore in the previous year, but it is 7.23 crore in the current year. Well and good. But if you want to know the real scenario, you should look at this. Even though they say their total income is so much, what is of significance for us is only the revenue from operations. Okay, it is only 286 and 282. So actually the revenue from operations have improved. Okay, and all their cost we have divided into cost of sales and other operating expenses and all, right? So we have rearranged items. We have brought all items that comes under cost of sales. So when we deduct these total from your revenue from operations, we get the gross profit. And look at here, gross profit has doubled, but sales have not doubled. Profits have doubled. So why did that happen? First, let's record this. There is a 1.53% growth in sales, and the gross profit margin, that is, we compare the gross profit with revenue from operations. This gross profit is compared with this revenue from operations, and that gives you 10.86%, which is almost double, right? Because in 2018 it was 5.86 only, whereas in 2019 it is 10.86%. How did this happen? Because in the previous year, that is 2018, what was their total cost? It is 265, whereas their revenue is 282, right? And so they had a profit of only 16.54 crore, whereas in 19, how it jumped to 31.11. See, actually it's a multifold effect. If you look at the changes in inventory, it has answers for all, because all other items there are only marginal variations. But look at this. This is 11.64, whereas this is minus 1.53. So the difference is 11.64 plus 1.43. So that's the difference. So it's say like 13 crore difference, and that obviously has caused this. So what is this changes in inventory? What that item mean? See, there is a concept called matching concept. If you want to measure the profit of the goods that has been sold, you have to consider only the cost incurred for those goods. You cannot consider all the cost. Okay, you have to consider only the cost that has been incurred for selling those goods. It means you would have purchased a lot of materials, but you would have sold only some of the materials. In that case, you cannot compare the sales of some of those materials with all the purchases. Okay, so that's the point. Look at this. I'll just take you through an Excel. Let's say you had opening, I mean this is deviating from our discussion. Let's say you had opening raw material of 600. You purchase some more raw material 650. It means the total raw material you had is 750. But at the end of the year, the raw material in hand is only 200. So what does that mean? You have consumed raw material worth 550. Okay, so this is your raw material cost, and let's say you have sold this raw material for 800 rupees. It means you made profit of 250 here. You made profit of 250 here. So this is the right way of finding the profit. See, what many people will do, they'll say they purchased for how much? 650, and they'll say they have sold for 800, and they'll say their profit is 800 minus 650. They claim this as profit. Actually, this is not profit. This is your cash balance. Okay, why this is not profit? Because you have not sold all the purchased goods. Okay, and one more thing, you cannot look at it in isolation, because you have sold for 800 and you purchased for 650, but in the beginning of the year you also had some item with you. In the beginning of the year you also had some items worth 100 rupees. So you had 750. Is it 750 worth of items sold for 800? Does that mean your profit is 800 minus 750? Again, no. It's because you had 750 worth of material, but at the end of the year, when we look back, you still have some items with you. That is, you have closing stock, right? You have closing stock of how much? 200. It means your profit is different. So how do we arrive now? What we can do, we can total this. So you get 1000 on this side. Take the total over here, 1000. So 1000 minus 100 minus 650, what you get is 250. This is your profit. This is your gross profit. Okay, this is the right way of approaching this. So what I did is I prepared a memorandum where I captured expenses one side, I captured income on the other side, and unsold stock I've captured on the right hand side. It's basically, instead of deducting on the left hand side, I've taken it to right hand side, but both methods gave me same solution, right? So here I have put that in statement form. In this case I have taken this in a memorandum form, but both the approaches are giving me same answer. So the message is, if you want to arrive at profit, you should compare your sales income only with consumption. You have to compare your sales income only with consumption. And how do you arrive at consumption? You take opening stock, you will add purchases, you will deduct closing stock. So what is important is opening minus closing is very, very important. So there may be purchases, there may not be purchases, but you have to find out these two. These two, that is opening minus closing. So here you have opening, here you have closing, right? The same pattern, either you put it in a memorandum or put it in a statement. This should be treated as part of your cost. So what happens when your closing balance is greater than opening balance? Obviously you will get a negative figure, and that negative figure will go to reduce your cost. And what will happen when your closing is greater than opening? That's what we discussed. On the other side, what will happen when your closing stock is lesser than opening? You will get a positive figure. It means it is getting added. See, when that will arise, look at this. You had 100, you purchased 650, and let's say your closing stock is only 20. Your closing stock is only 20. In that case, what happened? Your raw material consumed got changed as 730. You sold it for 800, so you made a profit of 70. So here, opening stock minus closing stock. Opening stock minus closing stock gives me the figure as what? It gives me the figure as 80. I can simply add the 80 with purchases. So 80 plus 650 gives me 730. That when I compare with sales, I get the profit as 70. So if your opening stock is lesser than, so I'll put the scenarios like this. If your opening stock is greater than closing stock, what will happen? That is, your opening stock is 100 and your closing stock is 80. And what is the formula? The formula is opening stock minus closing stock. You get a positive number, and this will become cost, or this will add to cost. And if your opening stock is less than closing stock, the scenario like this, where it is 100 and closing stock is, let's say, 150. So what will happen? Opening stock minus closing stock. You get a negative number, but still you put this in the statement under the cost of sales. So this will reduce the cost. This will reduce the cost. Now let's understand. We'll relate it with our real case. In 2018, the changes in inventory is positive 11.64. So when it is positive 11.64, this is the scenario. That is, opening stock was greater than closing stock. So it got added to cost. Whereas in the next year, the changes in inventory, let me just select that. Yeah. In the next year, you can see the changes in inventory is 1.43 crore negative. Negative is a scenario where opening stock is less than closing stock. So you get a negative number that goes and reduces the cost. And in this case, it is reduced substantially or sizably. Okay. And only because of that, you see a significant jump. We can also attribute to this increase. So there is a 4 crore increase on one side and there is almost 14 crore decrease. So it's like 4 plus 14, 18 crore. That's the overall impact. And that's why their gross profit got doubled. Otherwise, it will not happen generally. Okay. So gross profit is wonderful, but we should also look at one more profit. See, generally what people will do, they'll go and see gross profit, then they'll go and see earnings after tax. But in between this, there is one profit, very, very important, core profit, that is the operating profit. Let's look at that. Look at their operating profit. It is 2.89 in 2019, whereas in 2018 it was 10.54 loss. 2018 it was a loss of 10.54. We'll compare this operating profit with the revenue from operations. This is revenue from operations. And you can see it was negative in 2018 and 19. Yes, it has improved. So positive. But one thing you have to infer is this. 10.86% gross profit has come down to 1.01. It means they had so many other operating expenses. Okay. It has eaten junk or substantial portion of gross profits. Then let's see, there is one more profit, that is net profit, where you should compare your earnings after tax, this figure, with the top line, that is revenue from operations. And when you do that, you can see it was 0.34% in 2018 and it has increased or jumped to 2.11%. So it looks like it's a significant jump, but actually we don't have a great reason to be happy here. The reason is this earnings after tax is a byproduct of the non-operating income. If this non-operating income was not there, this company would have still reported loss. If this non-operating income is not there, this company would have still reported loss. Okay, so this company have to take efforts to reduce or arrest this operating loss. Okay, they should get into operating profit zone. Only then it can have investors confidence always. Okay, right? So 2.11% net profit margin, and you can see their operating profit margin was only 1.01, but net profit jumped to 2.11. It was mainly because of the non-operating income which has come into picture, and we cannot expect or we cannot predict non-operating income for future because they are not result of operations. You can predict only the sales. Okay, you cannot predict that next year there will be a bumper lottery for this company. That's not possible, right? Okay, so this is how you look at or evaluate the profit related parameters.
Thank you for watching this video. Hope you liked it. If you wish to learn more on this topic, do check our comprehensive online course. I have given the link in the description below. Lecture, do not forget to click on that like, share and subscribe button with bell icon.